Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into Olin Corporation's proxy statement. Proxy statements are like invitations to a company's annual shareholder meeting, but filled with information that can be surprisingly interesting if you know how to read it. Get ready for some boardroom drama, executive paychecks, and a little bit of accounting magic. Just kidding, you have been warned. This year's statement covers everything from who they want on the board to how much they pay their top executives, and we will make sense of it. First things first, what is Olin Corporation? They make chemicals and ammunition. Yes, you read that right, everything from chlorine to bullets. So buckle up because it's going to be an interesting ride. This letter invites shareholders to their annual meeting in May. It also encourages shareholders to vote on important matters, whether they plan to attend the meeting or not. They even mentioned that a whopping 93% of shares were represented last year. So what's on the agenda for this annual meeting? Well, there are three main things. Number one, they need to elect 9 directors to the board. These are the people who help guide the company. Number two, there's an advisory vote on executive compensation, basically a say on pay vote for the top bosses. And number three, they need to ratify the appointment of their independent accounting firm, KPMG. This is like getting shareholder approval for their financial watchdogs. Now, before we dive deeper, here's a quick heads up. Olin is trying to be eco-friendly and save some money by making their proxy materials available online. So instead of getting a paper copy in the mail, most shareholders will get a notice telling them where to find everything on the internet. Let's tackle some of the basic questions about voting. You'll be voting on those director nominees, executive pay, and that accounting firm ratification. Also, there is a thing called brokered vote your shares on certain items because you didn't give them specific instructions. So if you own shares through a brokerage account, make sure you tell them how you want to vote. Now, let's see, how much stock do the bigwigs own? This table shows how many shares of Olin stock are held by each director, some top executives. It's always interesting to see how much of the company the leaders actually own. Having skin in the game, as they say, keeps them motivated. Next, the report touches on related transactions. This section makes sure no one on the inside is making deals that benefit them personally, rather than the company. Olin has a policy where the Nominating and Governance Committee has to review any deals with executives or board members to make sure everything's on the level. They confirmed there were no shady deals during the year. The Audit Committee plays a vital role to oversee Olin's financial reporting and internal controls. This committee is a group of independent board members to keep an eye on the numbers and make sure everything is accurate. The committee reviewed the financial statements with both the management and KPMG. Want to get in touch with the board members directly? You can send a letter to the board or to an individual board member through mail. Send an email or call their helpline. All contact information is listed. Who are these folks they want you to vote for anyway? Well, they've broken it down into a matrix. About 89% of the nominees have senior leadership experience, almost 70% have global business experience. And the same with financial experience. What does it mean? A lot of the people know business and finance, but not how things actually work. Let's get to know some of the nominees. There's Beverly Babcock, a former chief financial officer. Edward Daly, a retired Army general, former managing director from Goldman Sachs. You've got Kenneth Lane, the current president and CEO of Olin, and several others with experience in various industries. It's a pretty diverse group with a lot of experience. They tell you what they bring to the table, like financial expertise, leadership skills, or knowledge of the chemical industry. Olin prohibits hedging and pledging of its stock by insiders. They don't want their executives betting against the company or using their stock as collateral for loans. As of early March, no shares were pledged by any director or executive officer. The board committees are Audit Committee, Compensation Committee, Nominating and Governance Committee, and Executive Committee. Now let's get into the juicy details. Executive compensation. This section explains how much the top executives are getting paid and why. The most important thing of the page, it contains a compensation table with all of what we need. Below, you can see the summary compensation table, and here we see total compensation in 2024 for our first CEO, Scott M. Sutton, was about $2.7 million, and our new CEO, Kenneth T. Lane, was about $20.3 million. Now, Olin's executives get short-term incentives depending on how well the company performs. The compensation committee makes cash awards under their ST short-term incentive program. The financial performance in these short-term incentives depends on the adjusted EBITDA, which represents their net income plus an add back for depreciation and amortization, interest expense, or income. For example, adjusted EBITDA had a performance target of 1,500 million. However, the actual performance was only 1,000 million, so they didn't get paid. Also, part of the financial metrics is levered free cash flow, corporate. Long-term incentives are where the big bucks come in for these executives. This is made out of two parts of equal weight performance share units that vest based on their total shareholder return and net income, and stock options that vest based on the service they provided the company. It's all about lining their pockets to performance and to shareholders' growth. Let's talk about the pay ratio. This is where we see how much the CEO makes compared to the average employee. In this case, the ratio is listed as 254 to 1. That means the current and former CEOs make 254 times what their median employee makes, or the supplement 200 employees. Now, this is a fun table. It's a comparison of all the things we talked about so far from 2020 until 2024. In summary, TSR, total shareholder return, has wildly increased. However, their last year total for NEA has dropped and now is about 2.2 million. What all of these numbers mean, their total shareholder return has increased, but executive compensation has actually dropped. Finally, in this section, we learn about the practices of stock options. Awards are scheduled 10 days after release of year-end earning report to avoid anyone from insider trading and taking advantage of knowing the release numbers. Alright, so what's the bottom line? This vote is basically a thumbs up or thumbs down on how the executives are getting paid. If you own shares in Olin, you have a say in whether you think the company is doing a good job with its compensation practices. Olin appears to be a company in transition. It is trying to balance the needs of today and the needs of the future by following best governance practices and rewarding executives as well. The company has significant reliance on world markets. This cyclicality introduces greater risk as well. It does seem that it is making its financials better by putting in place best governance practices and policies, and with such high return with stock options, it's hard to say it's bad. That's all for today's Corporate Decoder. Thanks for tuning in. Now it's your turn. Don't forget to like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time,